All right, so today we're diving into something that's, well, kind of overlooked, in the trading world, risk management,
Here.
specifically in Forex.
Right.
We're looking at this piece from the Inner Circle Trader on YouTube, and they don't really sugarcoat it.
Yeah.
It's not about like, oh, let's chase these big wins all the time.
Right.
It's like, how do you actually weather the storms?
Absolutely.
Because they're going to come.
They do.
Losses are part of the game.
Yeah, yeah.
So we're going to break down why it's so important to focus on, not just winning,
Right.
but surviving. Like, how do you actually stay afloat in the Forex market?
Yeah.
So no matter where you're at with your trading journey, whether you're just starting out or you've been doing this for a while, we're going to break this down in a way that makes sense.
Absolutely.
So one of the things that the Inner Circle Trader does right off the bat is he hits you with this, like, kind of shocking example.
Yeah.
Imagine you're putting 10% of your entire trading account on a single trade,
Okay.
and then that trade goes south.
Yeah.
Which happens.
This happens.
So if you're starting with $10,000, that's $1,000 loss right out the gate.
Right.
And, here's the thing. Even the best traders out there, they don't win every single time.
No.
And they illustrate that. They're like, okay, let's say you have a string of just 8 losses,
Yeah.
which, let's be honest,
Can happen.
happens.
Happen.
In
right.
Forex,
Yeah.
you could wipe out over half your account.
Yeah.
We're talking $5,200
Oh, wow.
in just 8 trades.
Yeah.
That's enough to make anyone want to just like,
Throw in the towel. Yeah.
like, I'm done.
It's emotional.
Yeah.
It's so emotional. And what's interesting about that is, the losses, they kind of mess with our heads a little bit.
Oh, for sure. Yeah.
And you start making emotional decisions and trying to chase those losses and trying to outsmart the market.
Yeah.
Which is where the illusion of control comes in. Like, you think you can,
Right.
force the market to go your way, but in reality, probability and math don't care about your feelings. And that often leads to what? Like, doubling down after losses?
Yeah.
Believing you can beat the odds?
Right.
But in reality, you're just increasing your risk at the worst possible time.
Exactly.
And so that's where mental capital becomes really important.
Okay.
So you might have, say, $10,000 in your account. Great.
Yeah.
But your mental capital, your ability to handle losses without making those rash decisions might be way lower than you think.
Oh, interesting. And they even highlight, what might seem like a more reasonable risk, like 5% per trade.
Right.
Which on the surface, you might be like, oh, okay, well, that's not so bad.
Yeah, it's a little bit more of a cushion.
Yeah, it cushions the blow a bit.
Uh,
But even then, 8 losses in a row, you're still down 30%,
so a lot.
which is $3,000,
Yeah,
which is still significant,
absolutely.
even if you're, a seasoned trader.
Yeah, for sure.
Clearly, how we handle these losses, which are inevitable,
Yeah.
is going to make or break our success in Forex.
It's huge.
But how do we actually shift our mindset from chasing those wins to saying, okay, how do I survive?
Well, the Inner Circle Trader really emphasizes that it's not about trying to never lose.
Right.
It's about having a system that allows you to withstand the losses and come back stronger.
Okay.
Think of it this way. Your ability to handle losses is like your financial immune system.
Ooh.
The stronger it is, the more equipped you are to handle the inevitable setbacks that come with trading.
Okay, interesting. So how do we build that resilience? How do we actually create a stronger financial immune system when it comes to trading?
Yeah.
The Inner Circle Trader, they introduced this really interesting comparison
Okay.
between 2 traders.
Right.
And they both start with, let's say, $10,000.
Okay.
And they both face 8 losses in a row,
Yeah.
which, as we've established, can happen.
Fans, yeah.
But here's the thing. Trader number 2 actually loses less money,
Right.
despite the losing streak.
Right.
How is that even possible?
Well, it all comes down to the power of having your risk after each loss.
Okay, so you would think, intuitively, like, oh, I've got to increase my bets to make up for these losses.
Right. You'd want to double down and get it back.
Right.
Exactly. But it's like, if you're in a hole, you got to stop digging.
Okay, that makes sense.
Yeah.
So how does that actually play out, though, like in a real trading scenario?
Yeah. So let's say both Trader 1 and Trader 2 start with a 2% risk on their $10,000 accounts.
Okay.
So that's $200 per trade.
Okay.
Now, they both hit that losing streak.
Yeah.
Trader 1, being driven by emotion, keeps risking the same $200,
Right.
hoping for a win to kind of get back to even. Right? Trader 2, they take a step back, right? They're like, all right, they have their risk to 1%. That's $100 after that first loss.
Okay.
They hit another loss, right? But because they reduced their risk, the impact is much smaller.
So they're controlling the bleeding, so to speak.
Exactly, exactly. And they continue this pattern, having their risk with each loss.
Wow.
Which means their trades might be smaller for a while, but they're protecting their capital during a drawdown.
Which takes, I imagine, an immense amount of discipline, especially when you're, eager to make back what you lost.
Absolutely. It's really, really tough. And that's actually where the real strength of the strategy lies.
Okay.
It's about removing that emotion from the equation and sticking to the plan, even when it's tough.
Yeah.
The inner circle trader actually gives this crazy example where he walks through what happens during a 24-loss streak.
Oh, my God. I can't even imagine.
Can you imagine, 24 losses in a row?
Yeah, that's brutal.
It's brutal. But even after those 24 losses, Trader 2, who's been having their risk, still has a significant portion of their capital left.
Wow.
They're down, but they're not out.
That's incredible. It's like they've built this, resilience to the market.
Yeah.
Where it's like, you can throw whatever you want at me.
Yeah. It's about understanding that longevity in trading isn't about, winning every trade or even every other trade.
Right.
It's about having a system that allows you to navigate those rough patches.
It sounds like this halving strategy, so many people are looking for that holy grail.
Right.
That, what's going to make me win every single trade?
Right. Yeah.
This feels like it's less about that and more about how do I manage when things go wrong?
Exactly. The staying power. And the inner circle trader uses this analogy, and it's a little out there, but it really kind of drives the point home.
Okay, I'm intrigued. Let's hear it. Okay, so what is this analogy? I got to know.
All right, so they call it the marathon effect.
The marathon effect.
Yeah. Think about it. When you're running a marathon, you don't sprint at the beginning, right?
Right.
You got to pace yourself, conserve energy for the long haul.
Right.
And, even the best runners, they might, trip, hit a wall.
Yeah, yeah.
The key is having the stamina to keep going.
Keep going. Okay, I like that. The marathon effect. It's like it really does highlight that this is about building something that's sustainable, not just these quick wins.
Right. Exactly. And that's what this halving strategy lets you do. You protect your capital, especially during those drawdown periods, so that when the market conditions are good, you're still in the game.
Right. So we've talked about managing the risk when you're on a losing streak. What happens when you start to recover? How do you know when it's time to bump up the risk again?
That's a great question. I think, again, discipline is key here.
Right.
It's tempting to be all right, I'm on a winning streak, let's ramp it up.
Yeah, yeah.
But you got to be measured. You got to be strategic about it.
So no, trying to make up for it with one big win.
Exactly. The inner circle trader, he recommends that more measured approach. Think about rebuilding a muscle after an injury.
Yeah.
You don't just go back to lifting heavyweights, right? You got to start slow, gradually increase it.
So how do you apply that to Forex though? How do you gradually increase the risk?
One way is to think about it in terms of percentages.
Okay.
Let's say you cut your risk from 2% to 1% during a drawdown. Once you recover half of those losses, you might bump it up to 1.5%. And then, as you continue to recover, you gradually go back up to that 2%.
It's so interesting how much of this is about having a plan, sticking to it, and not letting your emotions get the best of you.
Yeah. It's removing the emotional roller coaster of trading and replacing it with a system.
Right.
One that prioritizes that capital preservation.
Yeah. It really feels like that's the holy grail, isn't it?
Yeah.
It's not this magic formula. It's how do you manage yourself?
I think that's a great point. Trading, especially in a market like Forex, it's not just about technicals.
Yeah.
It's about understanding the risk, understanding the psychology behind it.
This has been incredibly insightful. We went from this terrifying prospect of completely blowing up your account to, okay, here's actually some really practical advice on how not only to survive, but thrive in the market.
Yeah.
And I love how, this idea of managing risk, staying level-headed, playing the long game, it applies to so much more than just Forex.
Oh, absolutely. Yeah.
Right.
It's a life lesson.
Yeah. So as you dive deeper into this world of Forex, or really any kind of investing, remember, it's not just about winning.
It's about managing the risks.
Exactly.